Ladies and gentlemen, welcome to our Thrive in China roundtable. Let me just see if I can fix the screen sharing on this. Um, on this, we have to take that out. Let me add people as well. All right. So, ladies and gentlemen, welcome to our Thrive in China roundtable. We had a break over the Easter holidays. I hope everybody else did as well. Before we start today's roundtable, I always like to enjoy understanding who is in my audience. So for those of you that are live, those of you that are going to be watching this on replay, do let me know. Are you a newbie to China? Are you a startup in China? Are you an experienced China hand? This always gives me a little bit of insight into who the audience is. And for those of you that are new to the Thrive in China Roundtable, my name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert on inbound investment into China with over 18 years of experience in corporate services and corporate compliance. My brother always, who's our managing director, always gets upset that I never add Hong Kong into the mix. Our head office is actually based in Hong Kong, and we have our subsidiary in Shanghai, China, for the mainland Chinese market. I'm also a creator of administrative processes that are there to help and guide small, medium-sized companies, startups in China who can't get their head around all of the administrative things that have to happen when going into China. So we've got about 8, 9 different administrative processes that can be basically replicated within your organization, helping to provide a kind of standards operating procedure, if you will, to get the ball rolling for you to be able to scale up in the market. And last but not least, before we start today's presentation, if you haven't received a free copy, we are offering a free copy to the whole Thrive in China community. It's an ebook that we have written called The 10 Biggest Mistakes Companies Make in China. And if you'd like to have a copy, email me at christina@woodburnglobal.com. So today is Roundtable 12 for 2023, where we are looking at how to calculate the registered capital for your China business. Now, before I start today's presentation, just to give you a little bit of insight, why I'm doing this presentation is because I talked to a lot of CFOs over the years who are anxious and have a certain level of fear about putting a designated number and feeling that they are either going to be limited by that number or that they are forced into sending that money over into China and never getting it back or never understanding the implications of that. So the whole point of today's presentation is really geared towards CFOs, finance managers who are probably responsible for coming up with this registered capital value that has to be provided when incorporating the entity in China. And I just want to highlight, there is no magic number. I'm going to give you some guidelines, I'm going to give you some references, but there is absolutely no magic number. The idea behind the registered capital, and I'll go through this within the presentation today, is that you have to create a budget for your China business. Ideally, together with that budget, you're creating a cash flow forecast, which will then indicate to you how much capital you actually need to inject into this Chinese entity to kick it off, start it up, pay for all of your initial expenses, pay for product, pay for service, until you have a break-even balance or cash flow positive situation within your organization. All right. So probably sounds a bit more complicated, but if you came here for a magic number, I can't give you one. Nobody can give you one. There is actual homework and action that has to take place from your end to calculate what it should be. Okay. So what is registered capital? Now, if you're planning on setting up a representative office, which most people aren't nowadays, the majority of people that are setting up representative offices are those that are purely having marketing offices in China, mostly for real estate that is being sold abroad to Chinese individuals. But basically, a representative office does not have a registered capital value attached to it. A representative office is purely a cost center where the shareholder remits capital that is used to pay off for all of the expenses. Representative office cannot generate revenue, it cannot invoice, it is purely a liaison office that does marketing initiatives. Okay. Now, registered capital comes into play with limited liability companies. And I have not used the terminology WFOE, FICE, JV. These are all limited liability companies. And ultimately, you have to look at your business scope to understand whether you're a service-oriented company, a trading company, a manufacturing company. And then obviously it comes down to the amount of shareholders that you have, whether you're going to be a wholly foreign-owned invested company with one shareholder who's a foreign investor, or you'll have multiple shareholders with a mix of them being foreigners or foreign invested companies or Chinese companies, okay? In the end of the day, when you are setting up a limited company in China, whether that's a WFOE, FICE, whatever your business scope might be, whether you have multiple shareholders or not, the registered capital ultimately is the capital that initializes, starts up your organization. That money, when designated, can come in tax-free. And ultimately, you then become an operational structure that pays taxes on revenues and on profit, okay? Now, for companies that are contemplating whether a representative office or a limited company might be more suitable for them, there is a type of trigger or threshold where a limited company could be more tax efficient than a representative office, depending on how big and how high your expenses will be within that organization, okay? So you're setting up a limited liability company. You've got this capital that will initialize, wake up, I guess, start up that organization, okay? Now, when you are registering your company in China, there are two numbers that you have to submit when you're doing your online application with the Ministry of Commerce. COC is the Ministry of Commerce. The two numbers that you have to provide is one, the registered capital, which is the actual money that will go into your bank account in China to start up the business, to pay off all of the initial expenses. This includes office rent, payroll, if you have to buy product, if you have to pay third parties like marketing companies, lawyers, accounting firms, headhunters. This is the capital that you are going to utilize to pay off these expenses. It's your startup capital, if you will. It's your working capital, okay? And basically that money has to be enough until you reach a positive cash flow status, meaning that there's enough revenue coming in, either from abroad or local, to support the running and the maintenance of the company. So that if you run out of registered capital, you have that revenue coming in to operate the organization. Now, the second number that you have to indicate in your application is the total investment amount, which is a ratio. And basically the idea is that the total investment reflects the total capital required to develop and run the company, not just in the short term, but also in the long term. And you are capped at a ratio amount. And I will provide an example of this later on, okay? The key thing I want people to remember with registered capital is that there are no minimum capital requirements by law, okay? I also want people to understand that according to the foreign investment law, which was updated, I want to say in 2019, could be 2019, 2020, under the new foreign investment, new-ish foreign investment law, in theory, you're not supposed to add in the number for the total investment amount. And in theory, there should be no ratio anymore. But when you're doing the online application, you have to, okay? And when you add it in, it has to be according to the ratio amount. So there is a contradiction between the new foreign investment law and actually when you are operating and setting up the entity, you do have to provide that number, okay? Now, as I mentioned, there are no minimum capital requirements in China by law. However, having said that, and I will touch on this later on, there are numbers that the tax bureaus like to see. There are numbers that your clients might like to see that you have. There might be zones that require you to have a certain value as registered capital as well. So although the law states that there are no minimum capital requirements, there might be other policies out there or guidelines out there that you have to abide by. It is really, really important. And when the law came out saying that the minimum capital requirements was going to be revoked, I was actually relieved, because although this might not make common sense, a lot of companies, in order to speed up the process of establishing the companies, just went with the guidelines and the minimum requirements versus actually creating a budget and a cash flow analysis to understand how much capital they actually needed to operate. Which then led to problems, because once the company was established, they were having to follow these guidelines, and the outcome was that the money was not sufficient enough to maintain the operation. And then you start have to figuring out through creative ways how to get money. Okay. So the key thing is remembering that you need to have sufficient funds within your Chinese organization to be able to pay off your expenses until you reach a cash flow positive status. Okay. I'm going to reiterate that throughout today's presentation. Now, I, for example, just had a call yesterday with a potential client who we were talking about the registered capital amount, how much were they planning on investing? And he pointed out to me that he's being actually pushed by a client to set up operations in Hong Kong and China for domestic transactions in each of those jurisdictions. He's already done Hong Kong, and he told me that he set up the company 6 months ago and still has not contracted with the client. And I warned him, saying, well, if in Hong Kong you haven't contracted with your client for 6 months, you have to think about this for China and realize that your registered capital has to sustain you until you do start contracting with that client, which might not be overnight. Not only might it not be overnight, but you also have to think about, when are you going to receive funds from these clients, right? How are you going to know that they pay you on time so that you can use that revenue to maintain the operation of your structure? And you might have contracts in place, you might have guidelines in place that tell your clients you've got a 14-day notice period, a 30-day notice period, 60 days, 183 days. But what happens if they don't pay you on time? What happens if they don't pay you at all? Right? And you have created a budget based on this payment schedule. So and then you've based it on this payment schedule, and then you've calculated your registered capital based on that payment schedule. So you've always got to calculate extra for just in case scenarios. Okay. Now, many investors, like I've written here, find ways to minimize their capital investments because or maybe you don't know, the registered capital is the liability of your structure of your business in China. Okay. And so they try to find ways to minimize their capital investments because they don't want to have such a high liability in the market. Completely understand that. But the outcome is that they don't inject enough capital, which then leads to the fact that costs are rising in China, especially in the tier 1 cities. If you look at salaries, if you look at rental amounts, if you look just at raw material prices, anything, prices are going up, and it is affecting people's budgets. Okay, so make sure that when you are budgeting, and I'll touch on this a little bit later on, you really are shopping around, but making sure you're negotiating long-term deals. For example, for rent, not just signing a 1-year contract, but signing a 3 to 5 year contract so that you've got this flexibility to maintain rental amounts. Now, the big question happens, right, from CFOs and finance managers: what happens if you miscalculate the registered capital? What can we do? Because it can happen. There can absolutely be circumstances and obstacles that arise along your way during your startup phase where you have just literally miscalculated because of expecting payment terms to be quicker from clients, whatever it might be, okay? or not expecting to increase headcount so fast. So many things can happen in that startup phase that sometimes are hard just simply to predict. So there are three ways or three methods of getting more capital into your structure. The first is using the difference between the registered capital and the total investment. This difference is called your foreign debt loan. And I've got an example, so we'll look at actual numbers and hopefully that will clear your head. Called your foreign debt loan. Now, the downside to the foreign debt loan is that you have to open up a foreign debt loan account with your bank, which can take 30 working days. So if that is an avenue, because the foreign debt loan will not be opened up at the point where you set up the entity and open up your corporate accounts, it will only be opened at the point where you need that foreign debt loan to come in. And so you have to calculate at least a month, if not a month and a half, with the banks to open up that account. Okay, so think about timing if that money needs to come in. The positive with the foreign debt loan is that you sign a loan agreement with your shareholder, you decide on interest rates, and you decide on a payment plan to pay back. Okay, but there has to be a foreign debt loan agreement in place. The other option is increasing your registered capital amount. You can only increase your registered capital amount if you have used up your registered capital and if you have used up your foreign debt loan. Then you increase your registered capital amount, but remember that in turn, this also increases your liability in the market. Okay. But you can absolutely do that. You have to take into account a 6 to 8 week time frame for that application. So think about cash flow and make sure you start that process quickly enough that you have enough cash then in the accounts to pay off for your expenses. The third option is not doing either one or two, but it's actually creating service agreements with your shareholder to receive funds into the Chinese entity. Now, this is was an extremely common method to use prior to January 2023, where there were really no issues at all, either with the tax bureau or the bank in terms of receiving these funds. As of January 2023, the banks have become extremely rigid on the wording and terminology within these service agreements, to the point where we're doing an application for this for one of our clients now, where we have spent just 2 months on the wording of this bloody service agreement, where it's not enough explanation on the services being rendered to it being too much explanation for the services being rendered. It's absurd. And we're now trying out the solution of just remitting the funds so that they're there in the escrow account, submitting the service agreement, and basically telling the bank, you do your own track changes to what you want to see. We'll make it as thorough as possible, but you make your track changes, and then we'll give you a copy that is specifically for you at the bank in order to be able to release the funds from the escrow account. Because it's just getting so complicated. And I want to highlight, if people are now asking, well, is there a difference between banks? No. Whether it's ICBC, Bank of Shanghai, I mean, HSBC and the foreign banks have always been rigid and strict. So I'm really talking about the Chinese banks that are becoming stricter. There's no difference what bank you're working with. We're having issues with all of them in terms of wording of these agreements. Now, what I want you to remember is that if you use your foreign debt loan, it comes in as a loan, tax-free. If you increase your registered capital amount, again, this is your capital amount, it comes in tax-free. If you start having service agreements, these are transactional agreements, meaning that VAT will become applicable to these agreements. So tax liability will be imposed. Okay, so yeah, again, with all these methodologies, these 3 methods, weigh out the pros and cons, do simulations in terms of the taxes that will be applicable if you have these service agreements in place, and see whether that's a methodology that you want to use. Now, to put concepts with actual numbers, I've created a very, very simple simulation here for you to see. So if you say that your total investment is 100,000 USD, then based on the ratio that is required, so if your registered capital is under 500,000 USD, the ratio registered capital to total investment is 7 to 10. So the registered capital will be 70,000 USD. Now I want to highlight that this ratio aspect should not be applicable because it's been revoked out of the new foreign investment law. But in practice, when you're doing your applications for your company establishment, it's a requirement, okay? So your total investment will be 100,000, ratio is 7 to 10, registered capital is then 70,000. Your foreign debt loan is 30,000 USD. Now, I think it's easier when I put numbers like this in place to say that I have seen a lot of companies where they use law firms to do the company registrations, that the total investment and registered capital is the same. This is possible. If you want to say that your registered capital is 70,000 and your total investment is 70,000, it's fine, no issues there, but it means that your foreign debt loan is 0. Which means that, and I have always called the foreign debt loan emergency funds. It means that you don't have this as a methodology to bring capital in, okay? So I always say make a difference, use that ratio to make that difference, that you have these emergency funds if you want to use them. The foreign debt loan never has to arrive in China, never. And that's why I call them emergency funds. However, the registered capital must enter China, okay? So keep in mind this ratio. Now, there are ratios going up if you have higher registered capital amounts. I have not put this in this presentation, but if you do have questions on that, let me know, and I can guide you on those ratios. Now, another question that pops up by a lot of CFOs and finance managers is, okay, Christina, let's use this example. Registered capital is 70,000. I'm not going to need this from day one. So when do I have to put that money in? Do I have to put that money in all at once? Can I bring that over a certain period of time? So the regulation is that you put in your registered capital based on the term of validity that you have chosen for your entity, which is a minimum of 10 years and a maximum of 50 years, and you can choose any number in between, okay? There is no right or wrong to this. Just keep in mind that 6 months prior to the expiry date of your Chinese entity, you have to go through the renewal, which is, the process is very similar to basically setting up a new entity again, okay? But that 70,000 US dollars of registered capital that you've designated has to come in the term that you have indicated when you applied for your incorporation in China, okay? So if you've chosen 10 years, that 70,000 US dollars must enter within 10 years. If you've chosen 50 years, that 70,000 US dollars must enter in 50 years. Remember, the foreign debt loan never has to come to China, totally up to you, hence why I call them emergency funds, okay? So, action plan. Now, the Ministry of Commerce, the Tax Bureau, and certain bigger state-owned companies like to see that foreign invested companies have registered capitals of more than the equivalent of 1 million renminbi. They like to see it. Now, for the Ministry of Commerce and the Tax Bureau, there will be no penalization. Nothing will affect you if your registered capital is lower. I think what I want to say there is they might just take you a little bit more seriously. Okay, but really no day-to-day impact whatsoever. Bigger state-owned companies, as well as multinationals, as well as certain clients that you might garner in China, and we've just had this situation with a client who's in the automotive sector. They did not have a registered capital. They had a registered capital that was under 1 million because that was all they needed in funding. And their realization was that they were losing out on certain projects by their clients in China because the clients were doing a due diligence on them, finding out that their registered capital was less than 1 million renminbi and not feeling secure in collaborating with them. It could also be that it's just an internal policy by these companies stating that they will not work with companies that have less than 1 million RMB in registered capital. Could very well be. So this client actually that I spoke to yesterday, they work with a multinational, and I said to them, please, please, please discuss with your customer in China what they want to see on your business license in terms of registered capital, because that might just dictate itself into you having to choose that number, even though that's not money you actually need in order to operate your organization. So then the question comes, obviously, well, if I only need, I don't know, 700,000 RMB to start up my business and designate that as registered capital, what am I going to do with this extra money? Just keep it. Again, emergency funds. If you've put your organization term of validity as 50 years, who knows, you might need that 300,000 that you're not using right now later on for growth, for scaling up, for further investment. Never feel like it's a waste, because you don't know how quickly you're going to grow and scale within the market. Okay. Now, another question I get is, well, Christina, what happens if just we've over budgeted, which I never see as a bad thing, and we're getting close to our term of validity, and there's still quite a lot of money that has to come in the form of registered capital. In this scenario, we can actually, in the renewal process of the company, tell the government that we want to use that leftover as the new registered capital for that renewal process. Okay. If you say to me, Christina, we're not planning on renewing, well, then you've got to liquidate your company. And when you liquidate your company, you are not obliged to bring in any of the funds again. Okay, any of the remaining funds back into China, you're liquidating, right? So don't ever worry about over budgeting, especially if the idea is to have a long-term commitment in the market and eventually renew your organization. But also think about it. If you put your term of validity as 50 years, God, who knows what's going to happen in 50 years in terms of the growth and the scaling up of your organization, right? If you're going to be acquired, again, whatever is remaining as your registered capital will then fall on the shoulders of the company that is acquiring your business. That's not going to fall on your shoulders. All right. Now, although when you set up a company in China, you are not required to submit a business plan, you're not required to submit a budget to any government bureau, we highly recommend you to create a detailed budget of how much capital you actually need during your startup phase. We calculate the startup phase is between 3 to 5 years. The reason why we're saying 3 to 5 years is because that's just the average we've seen over the last 18 years where companies break even. And then get into a cash flow positive status. If you are already transacting from abroad and you're planning on bringing all of that business into China, you will probably be profitable within the first year just because of that. So really, you have to tailor make this based on your own personal situation within your organization, okay? Make sure that you are having somebody validate your registered capital amount, because it really needs to make sense for you and your company, okay? So just have somebody verify it. Go through your budgeting with them and clarify that the registered capital is suitable. Nobody, myself, my team, anybody out there can say, well, Christina, what do you think of a registered capital of 5 million RMB or 5 million USD? I can't judge if I have not seen your budget, okay? And I have not seen how you're planning on growing and scaling. So it's really important to give context to somebody to be able to say whether that registered capital value is right or wrong. Now, in order, and I'm sorry I've added this chapter, but I want people to realize that the budget is absolutely vital to get to that registered capital number, okay? You've got to create that China budget to calculate your registered capital needs. It's not a number that comes out of thin air. It's just, it is not, okay? So one thing is create a China budget, right? Create, monitor, and manage a budget is key to anybody's success, whether they are setting up in China, whether they have a UK operation, US operation, Australian operation, it does not matter. A budget is vital to any business, okay? helps you to allocate resources, helps you to control your expenses, and it does not have to be complicated, okay? When you're starting up in China, and currently in 2023, we have a lot of companies that are looking to set up virtual offices in China just to get the ball rolling, either because clients in China are now saying, we want you on the ground, or they have to transact locally. They might not even need manpower on the ground. It's purely an entity that's going to be paper flow, okay? We're getting a lot of companies that are in this stage, okay? You've got barely any expenses. If you're operating virtually, no manpower, and it's just a matter of trade, whether it's goods or services, it's just then an accounting function that you need, right? Perhaps you might have marketing requirements and things like that, but that's separate. So really it's a cost center. And the question is, how are you going to operate that cost center? But the budget in the end of the day is going to be pretty straightforward. Okay, not complicated at all. Budgets become complicated when you start having manpower, you start growing, you start scaling, you're getting more and more clients, more and more distribution on the ground, or more and more procurement on the ground. Then of course your budgets get a bit more complicated. Now, in order to start the budget question, right? Basically, the questions you have to ask yourself, like you do in every other jurisdiction, is what are the projected sales for that budgeted period? What are the direct costs of sales, and what are the fixed costs or overheads? Now, for me, every single year, projecting sales is always difficult, okay? If you overestimate your sales, it will cause you cash flow problems. And I say this particularly if you're in your startup phase. If you are more, in your 5th, 6th year of operation, you're going to be more stable. You should have money sitting in your account that's going to protect you. But if you overestimate your sales, which a lot of people do, not actually in terms of sales that they're going to issue pro forma invoices for, but actual cash that is coming in, because people don't pay on time. And the trend right now is that multinationals are the worst payers in China. State-owned companies and Chinese companies are pretty much on time. You might have to follow up once, maybe twice. But really, the foreign invested companies and the multinationals suck at it. You might think it's the reverse, but currently it's not. So be wary of them. So if you're projecting revenue and sales, obviously look at sales history if you have it. I wouldn't recommend setting up an entity in China if you don't already have sales history, that you haven't transacted at least from your home jurisdiction in China. Don't set up an entity in China if you're brand new to this market. Now is not the time to be doing it. There's too much instability going on. But if you've got sales history from abroad already, use that data. And that should be your trigger anyhow to then push you to set up an entity in China. And obviously, think about how you're going to grow and scale in the market. So what do you think will come in for any additional efforts that you're going to place in market? Okay. And ideally, you're projecting that out for the next 12 months. And definitely look at margins, look at certain key ratios for your return on investment. The next is looking at obviously projected costs. Now, for me, costs in China, this is a piece of cake, because ultimately you have to contact your suppliers and shop around. But look at your fixed costs, look at your variable costs, and then obviously the one-off capital costs, which is buying equipment, if you're renovating office space, etc., right? But ultimately, you are contacting your suppliers, you're getting quotations from your suppliers, and please shop around. Prices are increasing, salaries are increasing, so definitely shop around. Don't always go with the cheapest, don't always go with the most expensive, go with quality service providers that are going to give you an added value. And the same with goods suppliers, shop around. Don't just rely on one supplier in China to procure goods for you or manufacture goods on your behalf. Try to shop around and have a backup of providers readily available. projected cash flow is vital, and actually the projected cash flow is what will help you come up with that registered capital value. Okay, so the exercise that we do is we look at the 12. So you have to think about the incorporation phase being around 3 to 6 months. Then once the company is incorporated, you start with your domestic local cash flow in China, meaning that that Chinese bank account is going to start paying off your expenses, right? So the first 3 to 6 months is really just incorporation, setting up the entity, opening up the corporate bank accounts. Then capital is transferred over, and that's the month we start. Then you want to do kind of like a 12-month projection, right? How much cash are you going to need month to month? If we start an incorporation in April, it probably won't be fully operational until October. I'm being conservative now. So we're looking at cash flow for the period of October, November, December, and then for 2024. The whole 12 months of 2024. So that is then 15 months where you are thinking about how much cash do I need to start off this business? And like I said, there are a lot of companies out there who are going to move all of their direct business into the localized Chinese business, at which point you might be generating revenue straight away. But like yesterday, I had this client who said, well, with my client in Hong Kong, it's taking 6 months. We haven't even signed the formal contract yet. But for 6 months, he's got an operating Hong Kong company doing nothing. Okay, so think about the timing. When are you planning on getting revenue, right? And then really calculate in detail, what are your expenses? Okay, it's not just rent. It's not just salaries. Might be marketing costs. You know, the minute that you start having an entity in China, your providers will come to you and say, you have an entity in China. Why can we not settle invoices in China? Why do we still have to pay that direct? So, you know, you have to really discuss with every single party that you're working with how that payment flow is going to look like and whether it's going to be localized or not. So doing this projected cash flow is vital, and looking at it, you know, again, based on the incorporation timeline, and then starting out what has to be paid when. Okay, and do think of it from a year-to-year basis. Okay, and how you're planning on growing on that. One thing I want to highlight about salaries. So if people are trying to forecast salaries, there are so many salary guidelines online from the big headhunters where they do quarterly, these quarterly updates on salary guidelines for a variety of different positions. When you are looking at those guidelines, please note that those salaries do not include the social insurances. And this is where a lot of people make mistakes now of not including, they take those numbers without adding in the social insurances, allowances, or whatever else has to be paid, or bonuses, or even salary increases after probation periods. They don't add that into their cash flow projections. Okay, that's a trend we've been seeing for a number of years. So really analyze that on detail. Now, if you base your budget on your business plan, you're ultimately creating a financial action plan, right? The whole point of this financial action plan is that you use it against your actuals. It's a way for you to link up your activities. It's a way for you to make decisions. It's a way for you to monitor and control. The biggest mistake we see companies make is that there's not somebody controlling the activities of the Chinese organization from day one of operation, meaning day one of when the whole incorporation and bank account is opened. Okay, if I look at my whole client list and I think about that moment in time, only about 5% immediately have a financial controller on board who is checking budget against actuals from day one. Normally, it takes about 6 months to a year for them to have anybody coming into control and to analyze. So please think, okay, no point going through this whole tedious operation of creating a budget, coming up with a registered capital, if if you don't have somebody financially controlling the business. Okay, because if you don't have somebody financially controlling the business, you're going to run through that registered capital like it's going through a sieve. It's all pouring out. And again, the biggest dilemma or pain point that startups have in China is the fact that they rush to use up all the registered capital without controlling it. And then they run into the dilemma of saying, oh, well, Christina, I have no more registered capital. How do I now get money in? We want to avoid that situation. I highlighted that those three methodologies. We really want to avoid using any of those three. Ideally, we want to have calculated the right registered capital for the startup of your business until you are cash flow positive. So any recommendation I can give you at this point is to say, make sure that from day one, you have a financial controller controlling this. If you decide to hire an in-house finance manager, that's part of their job. If you decide to outsource providers don't do this type of analytical work. It's an add-on. It's not automatic. So be wary of that if you say, oh, I'm going to outsource everything, outsource providers do not do analysis work, not unless you request it from them. It's not part of the day-to-day functions. Because as an outsourced provider, the goal and objective is to make sure that you just remain in compliance according to Chinese regulations, not to analyze your business. So if you need that analytical work, we highly recommend to have somebody in-house who is setting up that analytical system, processes, and can then compare. If you outsource it, it can get very, very, very messy. It's doable. It is just very chaotic and messy. Okay, so do think of that. Think about setting up KPIs. You know, I think I can say it from my own perspective. We did not create a detailed budget when we started up in China. It was a very vague, uncomplicated budget, grouping things together under one line item and then forgetting what's been grouped under those one line items. The consequence of not going into details and not setting KPIs for detailed line items is the fact that you can't compare over time. So, you know, we were, my old company was acquired in 2015, and we didn't have the ability to actually show year-on-year growth from day one of our operation in China, which was 13 years prior, to show how we've scaled and how we've grown. We just did not have that data available at all. So when you are creating your budget, think about creating KPIs for very specific line items. Don't just put everything into one revenue line item, break that down into as much detail as possible. The same with your costs of goods or costs of services, go into as much detail as possible. And then for your general and administrative expenses, don't just put marketing as one line item, go into those details. By going into those details, you will then be able to compare a lot of things over time, but most importantly, you'll be able to pivot your business much sooner if you see things are not going correctly. And again, that's the financial controller's role, is to analyze that data in detail and say, I don't know, in terms of marketing, social media on Little Red Book is lousy. We got to get rid of that and think about another avenue, right? You've got to make these types of decisions very, very fast. So key performance indicators, benchmarking guidelines are critical when creating that budget. And, you know, create those KPIs, create those benchmarking guidelines, and use them. If you're planning on hiring people locally, use those indicators as part of the key performance indexes for those employees that you're planning on hiring. That way you can relate it directly into your budget and into the actuals of your business. Final tips that I'm going to give you is that when you are creating your budget, so first of all, I started off today's presentation saying that I created this because a lot of people were coming up with registered capital numbers out of thin air. And I want to avoid people with coming up with these numbers out of thin air and then running into that pain point of not having enough cash on the ground, and using one of these three methodologies. And as I mentioned, one of the methodologies, these service agreements between shareholder and China, banks are becoming very, very strict and rigid with them. So it might not become a method eventually. So we have to think very carefully, what is that registered capital amount? So don't throw your budget haphazardly together. Obviously, if you're planning on setting up the entity in China as a virtual operation, because of the business circumstance you're in, you can throw that haphazardly together in a couple of hours. If you're actually going to be an operational business with people on the ground and whatnot, and growth and scale is going to happen quickly, take your time. The key that I want to emphasize here is have somebody help you to validate it. You know, the big four, the big eight, and other service providers, ourselves included, we can help you to validate your budgets. And we need that context in order to then be able to guide you on the right registered capital amount. Okay. Be conservative. I have highlighted throughout today revenue topics where you might not be getting cash in from your clients on time. If you don't get that cash in, what cash are you going to use to pay off your expenses? So, you know, you might have projections and forecasts where your revenue is going to be skyrocketing through the roof. Be conservative, especially in your startup phase. So especially within that 3 to 5 year time frame, give yourself a bit of slack and wiggle room when you are making your projections. As costs are increasing, take into account inflation, take into account that some companies, some suppliers may increase their fees 2 or 3 times within the year. Common now. So be aware of that as well. And then last but not least, monitor, evaluate, and reforecast. Like I just went on a rampage about, financial controller is critical. Somebody who's analyzing the business from day one. Now, if you're planning on having a virtual office in China, okay, that's not really a necessity. You have a virtual office, you have minimal expenses. The only thing really that's coming through is probably revenue and cost of goods, or, you know, cost of services. So there's going to be very little G&A expenses just in terms of professional service fees. If that is the situation, then really that financial controlling can be done from abroad. But if you are a fully operational business in China, that one of those first hires you make on the ground should be this senior financial analyst who is creating standard operating procedures within your organization, tracking your budget, tracking your actuals, and making sure that that registered capital is still viable for your business. Okay. That analyst is actually going to be the one who ultimately communicates with your head office about how the business is running, how is it kicking off, how is it starting off. And a lot of people think, oh, well, you know, there's not going to be so many transactions at the beginning. Yes, but they have to create the foundation, the system processes, accounting software systems, ERP systems. There's a lot of work that has to be done to create that foundation. So although you might not be transactionally in full blast, they still have a lot of prep work that they have to do on the ground as you are now starting to operate. And then tweaking it over time as you're scaling it as well. So making sure that we monitor, evaluate, and reforecast, and doing that monthly, if not even weekly. Okay, certain KPIs that you set in your benchmarking should be looked at a weekly basis. Other things might be looked at on a monthly basis. So if you came here today to think that I was going to come up with a number for you in terms of what registered capital should look like, I'm sorry to disappoint. There is action that you have to take in terms of what that number is going to look like, and it really does stem from your budgets. I will just add that having looked at your budgets, please also talk to clients about what they want to see as your registered capital. That might dictate a lot as well. All right. So that's the end of today's presentation. If you do have any questions, use this time now to insert that into the questions section. Don't know why that's not working. Let me get the Zoom. I'm trying to get the Zoom. There we go. The Zoom questions that I've already popped in. So Douglas, your question was, what is the registered capital ratio for investments over 500,000? So I believe between 500, and I don't want to make any errors here, so I do have to check up on this. But I believe between 500,000 and 1 million USDs, you're looking at a 5 to 5, 50-50 ratio, where basically 500,000 USD registered capital, 1 million USD would be the total investment, and then 500,000 USD would be your foreign debt loan. After 1 million, I have to double check. I don't have that on the top of my head. But the next level, I believe, is 500,000 to 1 million. Liam's question is, I wondered how long an entity can be left as a virtual in China. Oh, that's a very good question, Liam, and I don't have the right answer for you. So I'm going to rephrase it a little bit. I'm going to say, at some point, your entity in China needs to be profitable. A lot of people make the assumption that they can drag on their Chinese entity by not being profitable at all. What we have seen is that, and this is again why I'm using the 3 to 5 year time frame for a startup, is that usually in year 6, if you are still not profitable or not even close to breaking even, questions will arise during the annual compliance procedure of your entity from the tax bureau as to why you're not profitable. What is going on in your business that means you're not profitable? It means that they can do a tax audit. It means that they can do a transfer pricing analysis. They can then start asking questions, where is profit made? And things can get a little bit tricky. So startup phase should really be 3 to 5 years. Now, if you want to use that as a time frame, you could say, all right, for 3 to 5 years, we can be virtual. It's up to you, right? So you never, ever have to have people on your payroll. There is no regulation anywhere that says you have to have people on your payroll. The question more comes from profitability, transactional volume. There have been questions in the past that I have seen where tax officers will raise questions, again, probably out of suspicion, saying, wow, I mean, your profitability is enormous. We're really happy with that. You're paying your taxes in China, but how are you doing all of this without any staff? So when that has arisen, what we have had to provide as supporting documentation is who are all of the outsourced providers, meaning that you've got a warehousing provider, a logistics provider, an accountant, an outsourced accountant, and you have to show the full list of who your outsourced providers are supporting the business, which means that you don't have an entity in China. They might come back and say, well, how is effective management being handled? Where is the management actually sitting, right? So again, questions could certainly arise on that. So I can't give you a magic number for that in terms of how long you can leave your company as being virtual. But, think about it as just, if you're doing it purposefully because you're trying to evade taxes or minimize costs or whatever, just expect these questions to arise during your annual compliance procedures, or even just random questions that will pop up from your tax bill. And then you've had a follow-up question, Liam, and if any differences or consequences to consider when setting up as a subsidiary of, say, a UK company being the 100% shareholder. Your shareholder can be whomever. There is no difference. Whether you're a UK company, a US, well, client I spoke to yesterday was from the US. I will say this about US companies. You have to do homework on the US side as to whether with the current government, there are any restrictions for you to have subsidiaries in China, Hong Kong. Under Trump's reign, there were, in that during COVID, if you had any affiliation, and that was the word that was used in the regulation in that clause, if you had any affiliation to Hong Kong or China, you would not get COVID subsidies. So that's the US. In terms of the UK, I have never, ever heard of anything like that, even with the poor government relationship. There's nothing like that in the books whatsoever. But whether you use Hong Kong, Singapore, wherever, there's no issue in terms of who the shareholder is. Nathan, your question is the 10:7 ratio a mandatory requirement? Yes, it is. So when you're doing your online application with the Ministry of Commerce, that ratio is a requirement. It's not a sensible model, it's not a suggestion, it's a requirement. But like I said, the new foreign investment law has actually revoked this. It's just in practical terms, when you are physically applying, there's one item which says total investment amount and one item which is registered capital amount, and the ratio system is in the system. So if they see the numbers don't match, they will flag it and you can't submit. Liam, your follow-up question was, can registered capital ever be withdrawn, paid back to the shareholder? Yes, so that's a very good question. I didn't highlight that in the presentation. So when you set up your entity in China, you've got an articles of association, which are basically the company bylaws. And there's a chapter in there regarding registered capital. You can always increase your registered capital. And you've got to imagine the government, they're happy if your liability increases, but they're also happy when money comes into the country to start up businesses. In the articles of association, it states you can always increase. However, it does not state that you cannot decrease it. It just states that the application to decrease is never a guarantee. So you can't go back to the government and say, I overcalculated, can I now decrease it? What you can do is just say, I'm going to leave the registered capital amount as is, and I've got this term of validity to put it in. Now, registered capital is never paid back as registered capital. It is paid back through dividends. So once a year, once you have completed your annual compliance procedures, and obviously you're profitable, you've put money into your reserve funds. I'm going to touch on all of this in next week's episode, next week's roundtable, when we talk about repatriation of profits. You have reserve funds and whatnot. Then you can do your dividend application and repatriate through dividends. You're never limited on your dividends. There's no cap saying your dividends are going to be up to your registered capital amount. No, your dividends are your profitability, and you take that out through that application. Okay. Registered capital is just your working capital that comes in, and you use that to pay off for your expenses. Are the dividends tax-free in China? No, they are not. So dividends in China are, so there's a double taxation agreement between the jurisdiction of where your shareholder is and China. So if I use Hong Kong as an example, you've set up a company in Hong Kong company has set up a subsidiary in China. You look at the double taxation agreement between these two jurisdictions, the dividends tax rate in that agreement is at 5%. So you pay a dividends withholding tax of 5% on your net profitability, and then you repatriate it. Between the UK, because you said UK earlier, Liam, UK and China is also at 5%. Now, the issue with these repatriation strategies is that if your company in Hong Kong, UK, or wherever else is not showing any form of economic and commercial substance, you won't be able to benefit from this preferential tax rate that is in this double taxation agreement. So I have just done a dividends tax application, which took 7 months. So very bureaucratic. Doesn't mean you can't do it. You just have to go through the bureaucratic process. Took 7 months. And the questions that the tax officers do ask or do raise is that they might want to see a copy of your shareholders' P&L just to see that it's active and operating. If they see that it's not, then the tax rate will go higher up to 20%. I've never had this situation arise, but I think it's 20% dividends tax rate. Douglas, it's 5%. The dividends tax rate is 5%. It's not 10%. It's 5%. And it's been like that since the newest double tax agreement came out. But it is at 5%. Liam, do some states, regions in China offer incentives to register capital? I don't know what you mean by incentives. You mean, do they offer you lower? No, they will never offer you lower incentive. Like they will never say, oh, you can just put in 10,000 renminbi. No, most zones, especially if they're free trade zones, manufacturing zones, export processing zones, they will probably state, because of that operation, that you have to have higher registered capital amounts. So particularly in manufacturing type zones, where it's a zone predominantly of factories, they will say, you can't have a registered capital of lower than XYZ. It just does not make sense. You are building up a factory here, and they will have certain requirements. Back in the day, Dongguan actually had minimum, there was a zone in Dongguan specifically that had minimum registered capital amounts of 1 million USD or 1.5 million USD, something ridiculous like that. But I will tell you that for us, the lowest registered capital that we've done for a client has been 50,000, the equivalent of 50,000 renminbi. And I say this because they were getting money in very fast. So they did not have to, they just were accounting for 6 weeks worth of expenses to be paid, and that was it. I just want to highlight that for our business, I've never even injected my registered capital yet. Didn't have to. So our term of validity is 50 years. I know I have to put that registered capital in within 50 years, but I've actually never put anything in because I, again, created a business model where I wouldn't have to. Incentives like tax or payback incentives. Oh, Liam, yes. So I'm actually specifically, I just started in 2023 a relationship with a zone. I don't want to make a mistake now, 691 International Hub. It's based in Putuo District. They are a new little zone that have opened up, brand new buildings. And I have a relationship with the Promotions Bureau there, where you can get tax rebates. It has nothing to do with registered capital, but you can get tax rebates on VAT, on profits tax, even on individual income tax for the employees that are based in that zone. So yeah, there are a bunch of zones that will offer these types of rebates on profits tax, VAT, but it has absolutely nothing to do with registered capital. Yeah, I mean, the actual cash of the registered capital can stay in the UK. Like I said, you've got the term of validity to put that money in, but if you don't need it initially, you don't have to send it over. You have to send it over, obviously, once you start having local expenses. I'll give you an example. When we set up a company in China, and most accounting firms will be the same, is that because we are offering service in China to your Chinese entity, we have to invoice you locally. It's just a requirement. Otherwise, auditors will raise questions to us. You're doing a service to a local company, but you're paying abroad, and we could then get in trouble. So that's why I'm saying you have to check with your third-party providers that are supporting your business. Do you have to pay them locally, or do you have to pay them from abroad? But in our situation, we did it differently because we did our own accounting in-house. So we were fine. I didn't have to pay anybody else to do it. And we were getting revenue in very, very fast through the support of our staff in Hong Kong supporting that business initially. So that's why I've never sent money over. Simple as that. But every business model, again, like I said, is different. All right, I think we're gonna leave it there because we've run out of time. I hope that this presentation has helped. If you are struggling to calculate your registered capital in China, or you want to validate your budgets, don't hesitate to reach out to us. I will be sending out an email to the whole Thrive in China community with a link to our diary if you want to set up a call. But on top of that, you'll also get a recording of today's presentation so that you can take a look at it later on as well. So this link that I will provide to our diary will go in the email later on. Now, next week's roundtable is all about outbound payments from China and developing repatriation strategies. So it's developing repatriation strategies, i.e. the biggest question I get is, how do I get my profit out of China? But it's also explaining how payments from China to overseas happen, regardless of whether it's repatriation payments or whether it's just paying service fees or goods fees. I'm explaining what it takes in China to deal with tax bureaus, deal with banks, what documents are required, and the tediousness and bureaucratic steps that are required for that. But I will also be going through how to optimize your structure in China that you can repatriate profits out prior to declaring the actual profits tax in China. So if you've already subscribed to the Thrive in China community, it's the same link. Show up next week, 1 p.m. Central European time, and you can join us. I want to thank you all for participating, and I look forward to seeing you again next week. Take care and goodbye.